tuned into trading hour. For the market, we're around 32 points in the green right now. The mid-cap index is holding up very well, over 300 points in terms of a gain. Small caps are also solid, and the banks seem to have cut their losses a little bit. So, around 80 points from the lows of the session. But let's invite our market guest on the show now. We have Jyotivardhan Jaipuria joining us from Valentis Advisors to discuss where things could really be headed and if some pockets really stand out. Jyoti, thanks a lot for joining us. Always a pleasure to have you on. Take us through, how do you look at this now? Do you expect that we will see some kind of year-end rally? I know the last time that we spoke, you were a little bit cautious on the markets, but the commentary seems to be that, the US recession is pushed back a bit. We have the Q2 earnings season, which is over as well. How do you think we're set up now?
Like I said, Pavitra, I'm thinking like it's a range-bound sort of market. So we'll have more of time correction than a price correction, because valuations are expensive, and that's been a universal concern for everybody on the markets. So I think we probably get more like a range-bound sort of market with a bit of price correction, hopefully, along the way. Like you said, now we are entering a phase which is like a good phase seasonally for markets. You get a year-end rally in November, December, especially towards later part of December. So that's, one good seasonal thing to watch out for. The other thing which could surprise us is, and I'll just give you the data on elections. So in the last 9 elections, if we bought, 6 months before the election result and sold the night before the election result, we made a positive return on 8 of the 9 elections. And so, the trend is to have a very strong pre-election rally. The average return is like 14% over the last 9 elections. So to that extent, again, the seasonality is that, you buy ahead of elections rather than you sell ahead of elections. So, there are two seasonalities which probably are sounding like market should do well rather than do badly, whereas, the valuation suggests caution. So we're still sticking to our stand. It's going to be more like a range-bound sort of market.
Okay, so expecting a range-bound market. Jyotivardhan, hi. Good morning. Season's greetings to you and your team.
Hey.
So tell us, what's top of mind? Markets might be range-bound, but, there will be opportunities, I guess, for those who are looking hard enough. So help us out here. And tell us what's top of mind in terms of most favored themes right now.
So, Surabhi, there are two things which we are playing. So one has been pharma. So pharma has been like a sector which underperformed for a long time after that whole post-COVID rally. And that's something which, for the last 6 months, we've been buying very strongly. We continue to like it. I think as we get results, and we saw it in the previous June quarter numbers also, and I think we'll see it now also, most people will keep saying that, the US generic space is starting to bottom out. We had price falls there for the last 5-6 years. I think that has bottomed out, and that is probably going to help, have better numbers for most of the pharma majors. So that's one space we like. The other is the cement space, because, seasonally it does badly during the monsoon. Cement prices don't go up, but now that the monsoons are over, I think, that's another space which will start to look good. There's, of course, a lot of hope at some point we'll have more consolidation in the sector, which could be an additional trigger. So these are two spaces we like. The other thing we are watching closely now is the banks, because the banks are one area which look reasonably priced. We are seeing corrections because obviously there's a NIM pressure because deposits are starting to reprice. But banks is one space which we are watching on when to buy. So on falls, we would like to buy banks.
Okay, looking to buy banks. What kind? Are you looking at only large private sector names? Are you looking at non-banks as well? What about PSUs, which have already run up so much?
Yeah, so, within the banking space, we like the large corporate banks, and they continue to be good. But there are a lot of smaller private sector banks which have not participated as much in the rally. So there are quite a few of the smaller private sector banks, they are regional banks, which we can get at, reasonable price to book. Now, most of them we are getting at less than one-time price to book. And that's where I think a lot of value is there, because a lot of these things, as the earnings pan out over the next couple of years, you have credit growth coming, you probably will see them trading at much higher multiples from where they are today. So you could see like reasonably large returns in some of these.
Okay. Finally, Jyoti, your take on earnings of sectors where we saw the maximum amount of price rise and excitement. I'm talking about defense, some of these capital goods companies. We were speaking to some like Skipper just a while back, and they definitely have delivered. Cummins has delivered. They're sounding pretty optimistic. But then you have some of the misses. I mean, I was looking at the recent listing, Idea Forge and their numbers, for instance. This quarter, at least, not that great. So in net, what's the report card looking like for some of these highly chased sectors?
So, we on a very aggregate basis, capital goods has done well. So, by capital goods, I mean like companies which are supplying equipment and all. They've generally done, most of them have done well. The only thing is now the expectations on them have gone up because we've seen a very sharp share price increase. So they've done well, but they've more or less, met the expectations at a very broad level. The other sector you spoke about are defense. Now, defense is, not like an earnings story currently, except for the few public sector. But a lot of these are like the order book is there today. Hopefully, over the next few years, as they implement it, earnings will look very good. This is a space where valuations have, to some extent, at least the way we look at it, is run up ahead of expectations. So now the margin of safety here is very, very low. So, they will have to deliver what, is built into the share prices for us to make returns. But otherwise, generally we look for much bigger margin of safety when we buy stocks. So I would say in defense, particularly within the capital goods space, where the margin of safety is quite low.
Okay, got that. Out of time for now. Jyotivardhan, thank you very much for joining in. Once again, wish you a very happy Diwali, and we hope to keep continuing these conversations after the Diwali break as well. Well, speaking of breaks, thank you. Thank you very much. Thank you very much. Well.